All right. Hello, everyone. So, today we're going to be talking about swing trading, right? A holding period of anything more than a day and up to a couple of days, weeks, and holding that position for even up to a couple of months. Now, definitely, there are a lot of strategies that you can use in order to, to find the right kind of setup, to find the right kind of entry and exit points. There is one that I have been using for a really, really long time now, and it's a very simple trend following pullback failure method. Um, we are going to be analyzing a particular stock over a period of over a few time frames, multiple time frame analysis, and on the basis of that, we're going to follow a trend that is a continuous trend from the higher time frame to the lower execution time frame. We're going to be talking about this in much detail, so please watch till the end to find out how you can even backtest this strategy automatically to find out any number of trades that have been taken on the basis of this setup. Let's get started. I have a very fresh example of Polycab. Polycab came up in our scanner for for a swing trade. Now I'm going to start analyzing this on a multiple time frame basis. Now please pay attention to what we're doing here. Now, this is a bullish setup. This is going to be a long setup. That means we're going to look for buying opportunities. Now, how do we do that? Firstly, we're going to look at we're going to do a multiple time frame analysis. That means for the swing setup, this is going to be for a holding period of at least a couple of months, right? So if the holding period is for at least a couple of months, we're going to start our analysis with the highest time frame, which is the monthly time frame, right? We're going to the 1 month time frame. The condition here is that the 1 month time frame, the monthly time frame, on the monthly time frame, the candle needs to be bullish. The current month's candle needs to be bullish. That means the current closing price should be greater than the current opening price, right? Now, once that is established, now how do we know that this is in a long-term uptrend? So on my toolkit now, you can do this on on your own setup, plotting the moving averages. I'm going to be using only moving averages to figure out where the trend is, right? Where the stock is on the trend itself. Now, if you look at the monthly time frame, the stock has been super bullish. I'm using two EMAs, exponential moving averages. The first one is the 8 period moving average, and the second one is the 20 period moving average, the 20 EMA. All right. So the 8 EMA is the blue line and the 20 EMA is the orange line. Now, what I want to know is this stock currently in a bullish uptrend? Right now, how do I know that? I've just decided that if the current closing price is above the 8 EMA and the 8 EMA is above the 20 EMA, that means this is a perfect bullish setup, right? The closing price being above the 8 EMA. Now, what does the 8 EMA represent? It represents the average price over average closing price over the last 8 months, calculated exponentially. Now you may want to look up the definition or the calculation of the EMA. I'm not going to get into that. Also, the 20 period moving average, that is the 20-month moving average, is the slower moving average is below the faster moving average. That means the more recent trend is indicating that the prices are constantly increasing or rising. Now, even in those rising prices, there is a lot of demand for this particular stock, even above the average, above the 8 month average, the last 8 month average. Now, where is the price? This is much further away from the moving average, right? Now, this is on the the monthly time frame. Now we've established, and you will see that if on each time frame I'm going to make a note that I'm going to make a note about the trend, right? Now what is the trend here? This is a bullish trend. Perfect. Now I've established that this is a bullish trend on the monthly time frame. Now I'm going to go down. Now this is all we're going to do on the monthly time frame, the highest. A lot of people overcomplicate analysis by doing a lot of things, placing a lot of lines, placing a lot of indicators, oscillators, and all of these things to see. It's just going to confuse you, right? We are going to use only very simple moving averages, just a few lines here and there to see exactly what is happening, right? And I will also show you how well this has worked out in the past for not just this particular stock, for many other stocks that we're going to analyze. Now we've understood that on the monthly time frame, we've just used two lines and the closing price against it. 80 EMA is above the 20 EMA. The current closing price on this month is above the 80 EMA. That's about it. Now we're going to move, and we've established that this is a bullish trend. Now we need to do the same thing. We need to do the same thing with the weekly time frame. Now we're done analyzing the monthly time frame. We don't need to look for anything else. If you really want to see price action here, just a simple price action here, you'll see that even the closing price of this month has now broken out of the multiple previous months high. This is a good signal. Right now we're going to go to the weekly time frame. On the weekly time frame, we're going to do the same thing, just the simple. We're going to carry forward the 80 EMA and the 20 EMA, and on the weekly time frame, we're just going to analyze one simple thing, right? Is the current closing price above the 80 EMA? And is the 80 EMA above the 20 EMA? Now I've designed my moving averages in a way that if the 80 EMA is above the 20 EMA, it gives me a green shadow, a green cloud. Now very simply, if the if the 80 EMA is below the 20 EMA and this is crossed under the 20 EMA, it will give me a red cloud indicating that this is in a bearish phase, right? Bearish phase, or a bearish trend. Now this is a trend that is bullish in nature, and you will see that this week, the last week, this particular price, this stock has broken out of a multiple week, like what we saw on the monthly time frame. It has broken out of this consolidation with very good volumes. Now this is a bullish indication, right? So the closing price above the 80 EMA, taking support at the 80 EMA above the 20 EMA. This is a bullish stock. Now I'm going to, again, like how I made a note on the monthly time frame, I'm going to also make a note on the weekly time frame that this is a bullish trend. Now twice I have written down that this is the stock is in a bullish trend, right? So we've established that this is continuously bullish. We're just following the trend over multiple time frames, right? A simple trend analysis with moving averages is more than enough. Please do not complicate your analysis. Please do not complicate the things that you're doing, the prices that you're analyzing on the stocks. It really doesn't help. A simple setup is more than enough. If you follow this with a lot of discipline, if you follow this religiously, you will see that it really works, right? And we will see the nature of this particular setup in just a bit. Now, on the monthly time frame, we said it is bullish. On the weekly time frame, we said it is bullish. Now we're going to go to the daily time frame. Now here is where all the action is happening, right? Now, because we're using multiple time frames, the highest time frame is just going to give us what the trend or the bias we're supposed to keep, right? The moment we saw that it was bullish, everything else that we do on all the time frames, every analysis that we do on all the time frames, it needs to be bullish. It needs to be the same trend that you've established on the highest time frame. If in any case the trend is not the same as the highest time frame, ignore that stock for that time, right? That is a a confusion zone that is somewhere in the middle and you don't want to, and I'll show you examples of that as well. But for now, on the monthly time frame, we were bullish. On the weekly time frame, we were bullish. Now on the daily time frame, there are a few things that we need to do. I'm just going to firstly take this out. I'm going to go to the first step of my analysis, and I want to see if this particular stock, however, on the monthly time frame, we had seen that it is quite bullish, but on the daily time frame, I want to know that if this stock is above the 200 EMA band. Now, what is this 200 EMA band that I've plotted for myself? It is the 200 EMA close, the center line, the 200 EMA high, the green line, the top line, and the 200 EMA low, the bottom line. All right. Now, a very simple rule, it's a visual confirmation and a visual check. If the stock price is trading above the green band, above the green portion of this band, and I'll show you here, this green portion of this band, we say that this stock is said to be bullish, right? This is the bias. Now it is perfectly bullish as it is above the 200 EMA high band, right? Usually a lot of people just use a single line, the 200 EMA close, that's fine. You can do that, but for us, we want to make sure that we're not in between the 200 EMA close and the 200 EMA high, or anywhere in between these two areas of the band. We want to be comfortably above it to make sure that this is a confirmation that we're in a very solid uptrend, and there is no going back from the 200 EMA region. Now on the daily time frame, we've analyzed this on the first step. Very simple analysis, right? These are just very simple visual checks that we're doing. Now, now that we've said it is bullish, does it is it consistent with our highest time frame analysis? Bullish on the monthly, weekly on the bullish on the weekly, and daily bullish on the daily, right? Now we will go to our second step, where we're going to see where there has been a good support for this particular stock, right? Now, if you see this red line, nothing. Again, it's just the same thing, right? We've used a 50 period moving average. That is the 50 EMA here, the red line. Now, we want to know if this stock has been taking a support at any of these lines, and usually you will see that the 50 EMA provides a very strong support area for any instrument, right? Now, the same thing you will see here. After crossing over from the 200 EMA, and I'll show this to you here. After crossing over from the 200 EMA, above the 200 EMA, every time the price has moved, and this time this was definitely a retest on the 200 EMA, another retest on the 200 EMA, but then a good support at the 50 EMA here, a good support at the 50 EMA here, and a support at the 50 EMA at this point, and constant support being provided at the 50 EMA. This is probably a triple bottom support that you got once, twice, thrice, and many more times you've got a support around this area, right? So now stock is providing support at the 50 EMA. Now the condition is that on the daily time frame, like we saw on the 8 and 20 moving average pair, the 50 and 200 moving average pair, on this particular pair, the 50 period moving average needs to be above the 200 period moving average, and the current closing price needs to be above the 50 period moving average. Now, don't worry about this. There is an auto setup that I'm going to provide at the end of the video, where you will be able to figure out how exactly this works with an entire manual of what you're going to be doing and how you're going to be trading these swing setups, right? And this is especially for long setups. Now, on the daily time frame, we know that this is now comfortably bullish. We're going to close this, and we're going to go to the 8 and 20 the 8 and 20 pair, right? The 8 and 20 EMA pair. Now, what we need to really find out here, what we're really looking for here, is where is a bullish crossover after a bearish phase. There is a bearish phase here where the 8 EMA crossed under the 20 EMA, and after that, did the 8 EMA cross over the 20 EMA? This is our first cue for execution, right? We want to figure out on the execution. Now in the triple time frame, the multiple time frame, the lowest time frame is going to be where we are going to be executing the trade. That means placing our orders for an entry and exit. Right now, on the daily time frame, we see that there is a crossover of the 8 EMA above the 20 EMA. Now, what we've done is we don't jump into the trade, and a lot of people do this, right? Whenever you see a crossover, and this is what we always talk about, right? A crossover does not mean that the stock is going to go in the same direction, right? Like you see here, there was a crossover, that cross under, and the trend did not last too long, right? So these cases usually happen, and we're never going to be trading a long position, a short position in a trade in a stock that is showing bullish tendencies over monthly, weekly, and daily time frames, right? So we're always going to be looking for a long setup when the closing price is above the 200 EMA on the daily time frame. Now, after the bullish crossover, the first rule is that we allow the stock price to go up. We do not enter even right now. We allow the stock price to go up, and we're waiting very patiently after the bullish crossover for the price to go up. After this particular 30th December, 31st December, 3rd Jan, 4th Jan, the prices went up. We're still patiently waiting for our entry, right? What is our entry signal? Our entry signal is after the high, after making a high, the bulls usually, so basically the stock comes back to retest its previous support zone, right? Somewhere around here. You see this here. Now, after this breakout, it went up, but then the price comes back, takes a support, usually around the 8 EMA or the 20 EMA, making a very specific pattern called the ring low pattern. Now, what is the ring low pattern? You will see here that after making a recent high, the stock comes back to make two pullback candles, and within these two pullback candles, there is a lower high and a lower low in the second candle. And this particular pullback candle is touching or cutting through the moving average. This is our signal that the stock is trying to reverse the trend or doing a pullback or a retest, right? If this pullback continues, we know that we can't enter this trade, and the trend is going to reverse. But if this pullback does not continue and there is another move in the ongoing trending direction, now we know that this is a bullish crossover. Now our bias is that over all the time frames, our bias is that the stock needs to be bullish, right? Now in this bearish pullback, after this bearish pullback, if the bulls regain control and we say that they've established a closing price which is higher than this pullback, the second pullback candle, this is our cue that we need to enter here. Now you can either enter very close to the closing time on this particular candle, or you can enter at the open on the next day. Now let's see if we had opened on the next day. If we had entered on the next day, we would have waited for this price to move, and there was yet another pullback, and we don't consider this after we've entered the trade, right? This is our first pullback and the pullback failure, the resulting pullback failure. Now we know that this stock is really determined to go back up in the ongoing trend, which is the bullish trend. Now we need to allow this much time for the stock to take in order to offset all these all these pullbacks and give us a pullback failure. Now once this pullback failure has been established, we know that the stock is comfortably determined to go in the ongoing trending direction, which is the bullish direction. So we take our entry here. Now how do we place our stop losses? Now, a lot of people place a stop loss, just below the support of this line, of this candle. You can place a support here, you can place a support just below this low, you can place a support just below this low, and all of this is basically discretionary, right? Let's give it a system. Let's give it a real mechanical system where you can, at any given point in time, where whatever stock you're analyzing, you need to have a very fixed stop loss, a very fixed point at the stop loss, right? Really, it doesn't matter how deep the stop loss is, because your position sizing is going to take care of your risk management, right? So what you're going to do is you're going to basically, there is now, this is an invite only script. Please reach out to me if you would like to know exactly how this works, and to get your hands on this, on the invite only script. Imad's Trading Toolkit, this is not something that you will find on the community scripts or the public scripts. But I'm going to place something called the SL long line. Now this is a stop loss long line, which stop loss line for long trades, right? And this is something that I have developed over a period of time. It follows certain calculations, and this is only provided to our bootcamp participants who have taken our course, who have who are learning with us, and who are following the same setup in order to trade. Now, what I'm doing here is at the entry point, I'm not going to take this entry, I'm going to mark this closing price here. This closing price was the pullback failure price, right? Where the pullback failure actually happened. Now, whatever line I see, whichever line I see just below the red line that I see just below the pullback failure candle, that is the point where I'm going to mark my stop loss. Right now, basically this line this line gives us the gives the stock the room, the breathing space when it is moving in its phases. If, let's say, if this did not happen earlier, this did not happen after the pullback failure. After this pullback failure, there was a little bit of a retracement again. Now, even when the price goes down, we want to allow enough breathing room for the stock to make its moves before it comes back up, right? So this is where we're going to be placing our stop loss. This has been very carefully calculated. It gives enough room for the stock to breathe, but also does not suffocate us in terms of our losses, right? So this is a 6.14% depth from the closing price, from the entry price. We're going to allow that much. Now you can place the first exit at a 1:1. Now, yes, I know that risk to reward needs to be more than 1:1, 1:1.5, 1:2, 1:3. We'll talk about that later, right? But first, I want to make sure, and because I'm getting high quality trades over and over again every day, and I don't want to be stuck in a trade for too long, I'm all right with taking a 1:1 and moving on to another trade. I take my profit, move on to another trade, and keep moving to take more trades that are giving me these 1:1, and maybe one or two of those out of those 10 trades are failing. Right now, let's see what is the probability that this stock could have done this 1:1. Right now, you see that the 1:1 was achieved. Now I can trail my stop loss here and remove partial quantities, book partial quantities, and then keep moving. Now you see I'm heading to a 1:2 very soon, right? And I can keep going because the trend currently is a very strong bullish uptrend. It is a very strong bullish uptrend. I've seen this on the monthly time frame, on the weekly time frame, on the daily time frame. So it doesn't really matter, right? I'm going to continue staying in the trade with partial quantities and keep trailing the stop loss to make sure that I'm booking certain profits, and I'm also over a period of time capturing more of this move for 1:2, 1:3, and it can keep going, right, until I see a bearish crossover on the daily time frame. That is when I could exit. That is on the execution time frame. Now, how do I figure out if this trade can really work? For this, and this is really important, please pay attention to this part. On the indicators and strategies section, you will look for something called the swing trades validator. And this is a special toolkit that I have developed. In the community scripts, you will see swing trades validator. Please mark it as your favorite and put it on your indicators list. You're going to definitely need this, and this is something that really works, right? Now, on this, when I apply this to the swing trades validator, the swing trades validator to my chart, what I have here are two settings, right? And I'm going to mark this as an enhanced entry rule. I'll tell you what this means later on in another video maybe, but this one particularly, we want to figure out at this particular, and you see this signal has already come here. At this particular entry point, after this particular entry point, I have given my stop loss as 6.14%. Now, if I enter 6.14% here and a resulting 6.14% profit target, you see it has already given me where I can exit this trade, right? Now, what are the chances and what are the probabilities? Because trading is all about probabilities, right? We want higher probabilities in our favor. We want the probability to give us an added edge that this trade might do well. So if I say that 6.14% is the stop loss that I'm going to place below my entry point, and I'm going to take an equivalent profit target, what is the probability that this trade is going to work out in my favor? Now you will just go to the strategy tester, excuse me, and I'm just going to bring this down a little bit. Okay. Now you see on my strategy tester, what it's saying is there were 9 trades that were taken historically on the basis of my or on the basis of this particular strategy. This swing trades validator has been made specifically to follow the strategy that I've told you right from the start right now, right? Doing a multiple time frame analysis on the monthly, weekly, and daily time frame, making sure that we have a bullish crossover, a pullback, a recent high, a pullback, and a pullback failure. Now, the strategy tests the same setup, the trades that have been taken on this particular setup over a period of time historically. Let's see these trades, right? Now, there were 9 trades that were taken, and out of that, 77% of these trades were profitable. And let's see the performance summary. When I look at the performance summary, it will tell me that out of the 9 trades that were taken, let's say here, out of the 9 trades that were taken, all of them are closed. There is no running trade on this strategy. There were 7 winning trades and only 2 losing trades, right? And it also tells me what is the average duration that I will probably stay in the trade. Now, this is so important for a lot of traders, right? We enter the trade and we want to know exactly how long can I really wait, because patience is something that the trader always needs, and the market always rewards the patient trader. Right now, think for a moment, if you knew exactly on or let's say on average how long you really wanted to you had to stay in the trade, you would only check around 7, 8, 9 days, right? If this was the average duration was 9 days, you would on average wait for 9 days for this trade to work out for you, right? So you have an expectation in terms of the timeline that you will achieve this target profit in, and also now you're a little more your anxiety and your expectations are all in check, because you know that for the next 9 days you can expect that the stock will not give you the target on average. But you will see that on average, the number of bars in winning trade, that means it usually takes 6 trading sessions for this stock to give you the average 6% profit, right? Now, this is important. And now we'll see some of the historical trades that were taken, some of the trades that were taken previously, right? Now, let me go to the first trade that was taken on this particular setup. Here, You see this on the daily time frame. I entered after I got a pullback failure. Let's see here. This was the ring low, and any close above this high was my pullback failure point, and immediately the next day I would have entered at the open, and within the same day itself I would have achieved the 6%. Immediately in the same day, on the same day I would have achieved the 6%. Now I would have got another entry, I would have taken this, and I would have achieved the 6%. Now let's see another trade. I would have seen this pullback failure, the close above, and the entry here, right? And I would have taken this profit. Now let's see some more trades. Okay, here one more. Okay, this one particular, this trade, I would have entered at this point and I would have taken an exit here, entered here and taken an exit here at a 6.14% profit before this dropped, right? Oh, okay. This was a stop loss trade. Okay, perfect. This was anyway, this must have been a freak trade when you see this particular line. It's just, some kind of a freak trade that happened. Doesn't matter. These trades keep coming. Long entry here, we would have taken an exit here with a profit. Long entry here, we would have taken an exit with the profit. Long entry here, this one we would have taken an exit with a loss, right, a stop loss. And why would we not enter this particular trade? Because it is already overextended from the bullish crossover, right? There's so many times that the entry has been taken that you don't want to enter at such high prices, right? We would have definitely not traded this, but that's again something discretionary, right? But in terms of probability, every single trade that you would have taken on this basis, here again, you would have taken your target profit, right? So 6.14% is a good target profit to achieve. Now, if you want to optimize this particular exit and you want to say, what is the probability if I make my target profit 12%? Sorry, 12%. Now you'll see that your chances are going to reduce drastically if you just take a 12%. So your 1:2 is definitely not achievable on this, right? Now let's say how about I take an 8% target profit. Now you see that there is a 70% probability, and there were 10 trades that were taken on this basis where you could have achieved an 8% target profit, right? Now let's say if I take a 7% target profit, will my chances increase to achieve that? So this particular tool allows you to optimize your target profit in such a way that you're able to achieve it. Now, if I said 5%, would my probability increase? No, it's still the same. So I may as well take the 6.14%, right? So I'm going to take the 6.14%, and this is going to give me an average of 9 days that I need to wait for. But here you see my average has dropped with this particular trade. It's just 1, 2, 3, 4 trades, that are 4 days, 4 trading sessions that I had to wait for, and I got the target profit. Now, does this work with every other stock? Let's see. This has been specifically designed for for the Indian stock market, but you can try to backtest this, and backtesting is not like something that you need to do manually, right? You can just use this validator to backtest all the trades that were taken historically. Again, here same thing. I'm going to very quickly take you through the multiple time frame analysis on UPL. Monthly time frame, were we bullish on this month of January? Yes, we were bullish. And in fact, even in the month of December, we were bullish, right? In the week of month of December, sorry. In the week of January, we were completely bullish across these 3-4 candles. Now on the daily time frame, we got an entry signal here. Let me pull this up. After bearish phase two, there was another slight, a recovery in the long direction. But again, after this bullish crossover here, after this bullish crossover, we allowed the prices to go up. We saw that there were two candles that were making lower high and lower low, and a resulting pullback failure. And after the pullback failure, we would enter at the open on the next day. Now, I've entered here at the open on the next day, and I'm going to place my SL long, and I'm going to see if I can get a 1:1 here, right? Now, let's say I entered. Now, my closing price is going to be my entry point, and my ATR. This is my SL line, which is going to be amazingly standard here for a 6% stop loss, and a subsequent equivalent 1%, 1:1, right? Now, the trade is still going. I can still trail this trade for a while longer. But if I had entered at this point and I'd kept a 6.08%, which is what is visible on my stop loss, right? 6.08%. If I look at my strategy tester, it says that out of the 38 trades that were taken on the basis of this setup, 76% probability that your trade might be profitable. And for how long do you need to wait for this particular trade to turn out in your favor? 10 days on average. Now, you know that anything above a 70, 75, 70, 75% is just amazing, right? So out of the 38 trades, let's see, out of the 38 trades that were taken, 29 trades were profitable on the basis of this, where you got your 6.1%, 6.08% profitability, right? And only 9 of these trades were not profitable. So you know that the probability is in your favor. There is a 76% chance that again this trade might work out, which again it did. And you had a timeline of 10 days to wait for this trade to work out, but this trade took only about, let's say, 4 bars on average, and you're still going on, right? You're still trailing this. So I can pick up a lot of trades, right? Now let me look at LNT. LNT has just given us an entry. Now I'm going to pick this here. A bullish crossover, pullback at this. In fact, you would have seen that after the prices went up, this would have been a ring low and a pullback failure here. We could have, yes, the long entry has been triggered here. And from here, let's say if we had to, let me place, okay, I've placed the stop loss. Let me see if I had entered at this point and given myself a stop loss of 5.7%. 5.7%. Now, if I give myself a 5.7 stop loss and target, out of the 44 trades that were taken in Larsen & Toubro, 72% of those trades were profitable, and I had to wait on average 13 days for me to achieve this target. Right now, let's see how long it took for me to achieve this target here. You see, it took me only about 11 bars, right, on average, around the same time. So my expectation in terms of time is set. My expectation in terms of the probability is set, that will this work out, will this not work out. If you see that the probability is low, just ignore that trade, don't take it. And if you see that there are multiple trades that have been taken on the basis of this setup, it's even more a point for you to be convinced that you can take you can take your the probability in your favor, and see that so many trades have been taken, and out of that the probability is great, and you will be able to capitalize on that probability in this particular trade as well. So I'm taking this moment to request you to subscribe to this channel. It greatly, I'm sure it's going to help me in creating more content and coming back to you with more information. But this is something that you can do. This is a very simple strategy, very simple setup, and I'm not going to overcomplicate this. You don't need to overcomplicate it with so many indicators and oscillators and other things. You just need to work with what's simple, what works, and what you can see that has historically worked out. So this is a proof that you don't need to backtest this, right? You don't need to backtest this strategy because the swing trades validator is backtesting it for you. Every single trade that you're going to be taking or you would have taken in the past, all of the entire list is here, right from here. This LT, right from 2006, you would have seen trades being taken, right? Trades being taken. Now, this is something that you will see historically. You can pick out any trade and see how it has worked out and what the entry conditions were and how long you needed to wait. So yeah, that's about it. This has been a long video, but I'm very sure this is going to be really helpful. Please find this swing trades validator on your indicators and strategies, add it to your, and I'll tell you why you would need this, right? And swing trades validator here by the daily trader. If you look at this at the manual, you will see that everything, the entire analysis has been given to you. How you need to use the validator, what is the setup, and the entire code is open, so you can apply this on your you can study this code and see exactly what the entry conditions were, what the long condition was, and how you needed to use this, right? If you have liked it, please don't forget to give me a thumbs up here. And this is going to help a lot of other traders find this indicator, find this validator, and it's going to help a lot of people. You will see that it definitely does work, and you can use this in the exact same way that I've shown you, and I'm very sure you're going to find it to be a very peaceful way of trading. Please don't forget to subscribe to the channel and reach out to me if there are any further questions on this particular setup, on this particular swing strategy, and we will talk more. Thank you so much for watching, and we'll come back with another video soon.